Yeah, good morning, everybody. Thank you all for coming and being here this early. Hopefully, it's going to be a good debate this morning. Just before we introduce the panel, we get into the initial discussions. Just wanted to say a few quick words of introduction. From Inside Housing's point of view, I mean, we haven't exactly been short of things to write about across all the party conferences, actually. So, from the announcements at Labour to obviously what's been talked about at the Conservative conference in terms of some of the welfare changes, and then going back a month or so ago, obviously there was the housing stimulus package the government talked about. So I think housing, for a variety of reasons, is very much at the forefront of a lot of politicians' minds just now, which is good. But it does mean rather that the focus is very much on us as an industry, as a sector, to be coming up with ideas about how we can start to deliver on some of the expectations that ministers have of the sector. I think So today we're talking about housing growth and where it's going to come from. Is it going to come at all? I suppose is a fairly fundamental question. But I think just very useful to kick off with just a couple of brief statistics. You think about how much growth we actually need. And apologies if there's any of my relations, cousins in the audience, but I'm going to talk a bit about England here as opposed to Scotland. But the figures for England, the consensus tends to be around we'll need to be seeing about over 200,000, maybe 220,000, 230,000 starts a year. I was at a session with the new planning minister, Nick Bowles, the other day. He was saying that potentially up to as many as 290,000 homes a year, which seemed a bit ambitious, but that's an interesting position for him to be coming from. So that's kind of the scale of housing need. We've all heard the figures around 5 million people on council housing waiting lists, things like that. I think there's within Birmingham, I think there's a requirement for about 70,000 homes. I'm sure people from Birmingham will correct me on that if that's wrong, but there's a real need. We know that much. Where's it coming from? Well, we can see currently that the figures for England show that are about, over the course of the last 2 years, on average, we've had about 109,000 starts across all tenures in England. I'm just a journalist, but even I can add up and say that that's nowhere near the 200,000 that we actually need to be looking at doing. So, so there's a bit to be done. I think that's fair to say. The government has focused very much on recently on the private rented sector and the extent to which that can potentially be an area for growth. We've got a number of commentators in the panel today who can pick up on those issues. But again, we're keen to hear from you in the audience as well about whether or not you agree that we are on the cusp of something fairly significant happening in that area. Housing associations, obviously organisations that we write about quite a lot at Inside Housing, their position in terms of housing growth, they benefited very much from the largesse of the previous Labour government, where they pumped lots of money into housing delivery over the course of the last few years of that government. But those starts are tailing off now, obviously, as well as with as a result of private house builders' starts being far below where they were even a couple of years ago. So you've got housing associations in England. They're currently starting about 19,000 homes a year. You've got house builders. And the figures for them, so they're currently doing around 84,000 starts a year, which is probably about 40, 50, even 60,000 below where they were at, over a significant number of years through the noughties. So, so again, we're a way off where we probably need to be. The other great hope has been obviously local authorities and the extent to which they might be able to come through and plug some of the gap. We can hear more about the potential there, but with the deal that's been done to reform council housing funding, I think the HRA reforms that have been done, I know Richard worked very closely on, but are people kind of confident that might help be the kind of shot in the arm that a lot of developments need? Be interested to hear people's views. Okay, I think that's pretty much what I wanted to be saying to just set the scene. Our panel this morning, I'll go from the from your left, we've got Nick Jopling, who's a director at Grainger and also was a member of the Montague Private Rented Sector report, which published a month or so ago. We have Chris White, who's the director at Regeneration Consultancy CBRE, Richard Parker, who's a partner and head of PwC's housing team. We've got John Frankovitz, who is the chief executive of Wilmot Dixon Capital Works. Okay, I think each of them is going to speak just initially for 5 minutes each, just to kind of get their thoughts going on what they think are the important issues in terms of housing growth. Excuse me. I think we're going to start at the far end. Nick, if that's okay, we'll kick off with you. Thank you.
Oh, that was me thinking I would have a few minutes, and I thought sitting at this end, I'd be able to have a few minutes to think about what I was going to say. And many who know me, I really am going to keep it to 5 minutes. And perhaps if I use that to just focus on the Montague review. Important to remember what remit Montague was given in December at the end of last year. It was only two things. He was asked by Grant Shapps to look at finding ways to get more building, more construction in Great Britain, and secondly to try to find a way to get institutional money into the private rented sector. Very specifically, the private rented sector. It wasn't about the social housing sector. It wasn't about build for sale, although the build agenda covered that. We sat for a long time, and a lot of people responded, and they published at the back. And interestingly, not many house builders participated. Small National House Builder Federation responded, but not much interaction. We had a lot of people come in and talk to us, and I think in some ways that was disappointing because it effectively building is. If you ask people what building is, it's about house building. But what became very clear is that the demand for rental homes there was no one doubting that. The interest of institutions was there as well, but the bit of not being able to join it up, and it's well rehearsed because we've talked about it for a long time, is the institutions want something that's stabilised, it's finished, it's up, it's leased, and they can get a yield off it, do a multiple of it, and then they'd like to invest in that. And there's nothing really available for them to invest in today out there. Nothing in consolidated form, and many portfolios are out of distressed portfolios. That's not really what they want. So you have a mismatch in that there's the public land agenda. There is an enthusiasm among all sorts of people to be able to build, to try to build specifically for rent. But that funding piece, funding that, was hard to find anyone to actually fund it. And very simply, often I think it's very simple, and I think to most people in the room it'll be very simple. The mismatch between the price of purchase of, let's talk about a building of 150 units, purpose-built for rent, nothing else, the price of a fund buying that is lower than the cost of effectively building it. And a house builder would effectively say, well, it's always worth more if we sell it. And so Montague really wanted to get to grips with this. And the only way of getting those two to match so that the institutions could meet the price of supply wasn't by putting rents up or perhaps squeezing the management cost a little bit, but because it was an assumption that people like RPs and things like that would manage, and you'd get that efficiency of management which you'd get out of the scale of the buildings. It had to be in the cost of supply. And the two major constituencies are the cost of construction and the cost of the land. And the cost of construction, and there are people better here to talk about that than me, but it was assumed that it's pretty narrow variable in that. So we focused on the price of land, and we focused on public land in particular. And part of the constituents of the cost of land are the Section 106. And I'm going to get straight to the nub of this, and this is the bit that I've spoken at the other conferences and the bits that people found difficult to take out of Montague, when Montague said in order to start these type of projects, local authorities should look alongside with developers at waiving some form of the Section 106 to build these purpose-built blocks. And the people who said, well, that we can't do that at the cost of social housing, we can't build private housing at the cost of social housing, But they didn't read to the end of the sentence. What Montague went on to say, he wasn't imposing this. He said this was within the authority, effectively, of local authorities. It is in their powers. Didn't need to create legislation, a new planning use class or whatever, to be able to say that if a developer or if an investor is prepared to commit that that building would be leased for private rent for, say, 12, 15, 20 years, then that was a price that was worth paying for removing the Section 106. Because his whole intention is that it would be accretive. You take a large development, 600 units, a regeneration unit, that if you could build 150 units today and not compete with the build for sale, which would have the Section 106 attached to it to deliver the affordable housing, the argument was, he said, surely this must be accretive. And that was his first and two recommendations, one about the use of public land, two about looking at that use of playing around with the country. And I think local authorities, I've been around the country, spoken to many local authorities, I think local authorities sort of are getting this. I think they're saying, actually, this might make sense. I know we don't want it at the expense and losing social housing, but actually we'll have a look at this. There may be some... yes, he talked about the task force, and then just finally, he talked about the money. And there were two bits of money. And because Sir Adrian was chairman of the Green Investment Bank, and he's an ex-civil servant in the Treasury, he's also chairman of 3i's, he's an extraordinarily bright guy, and been around the industry. And I think that experience he'd had in the Green Investment Bank was the thinking behind that 200 million that the government have already allocated, and said, actually that could be the enabling one. Remember the gap at the beginning, to get it up to something that's stable and palatable to the institutions, so that we've got to do that Blue Peter bit. We've got to build the thing and deliver it and have it there ready. Similar to how the student housing providers have done it and delivered stuff that's valued off a yield. At the end of the day, it covers sui generis, committed to what it is. It's one particular use. And so that was the 200 million. In record time, the adoption of his recommendations, and then as a sort of bonus, the 10 billion loan guarantee that has been waived. Details to come out on that. That's more for the other end of it, to help the institutions take that piece, or investors take a piece. So all in all, I think Montague is a very, very significant piece of work. I don't just say that because I sat on it. I say it because I think what it for anyone who hasn't read it, it's only 11 pages. There's only 5 recommendations. It really is worth reading, and if any of you are in a position of influence within an LPA or whatever, then to see if there's ways to adopt it.
Nick, that's great. Thank you very much. Before we go to Chris, there's something to say of the gentleman who snuck in there, under the radar, is Nick Ebbs, who's the director at England, also the chief executive of Blueprint in the East Midlands. Nick, don't worry, I'm not about to jump on you. Going in order, don't worry. But welcome to this morning. Our next speaker is Chris White from CBRE. Chris.
Okay. I'm going to have a look at this in a slightly different perspective, because I'm sort of in the privileged position of not being a developer, having to actually build these units, and not in a local authority where we're having to put land up and being asked to give away value. As an intermediary in all this, I can start to look at delivery models, good elements, bad elements, have a look at the market, see what the market's doing. And the three sort of main topics really that I'd like to sort of have aired today in part of the discussion is really building on where Nick left off, and this asset, this investment portfolio, this role of the institutions. We're in a position at the moment where we've got practical examples where we're trying to sell a large 500-unit private rented scheme, and the institutions are saying the right thing, they want to be involved, they want to acquire these things, but when they actually have this portfolio put in front of them to sign on the dotted line, they're pulling back. And one of the issues that we've got here is an acceptance that private rented sector is an equal asset class to a commercial development, a student accommodation block, or whatever other means you want to put your money in, gilts, bonds, whatever. It has to be a recognisable sort of a separated asset class that you can actually value. And one of the important points that Nick raised there was this yield progression, and the cost of entry is greater than the value you can sell the asset at, or it's actually the breakup value is more valuable than the cost. And the trouble with that is it's always going to be easier to break these assets up and sell them individually than it will be to have them as an asset portfolio in a rental model as we currently see it. So I'm looking at how can we get the institutions, one, to buy in, how do we get them to accept it as an asset class, and then secondly, well, thirdly I should say, if I can add up, and how you actually then create stock, because without stock you don't get comparables. The second point I wanted to have a look at was really the delivery organisations that we currently have. We're talking about major house builders, and without wanting to upset the organisations at all, they're not set up to deliver private rented accommodation. Their models are all based on private sale. The valuation angle is all about the maximum value for residential units, and that will always be selling an individual unit in the open market. And these guys have got long 5, 10-year, 15-year, 20-year asset portfolios and land banks, all structured on delivering private value housing. So they have, understandably, a difficult decision to make on top of the last 5 years of economic crisis, where their asset portfolio has already been devalued. So how do we incentivise these guys to actually change their asset portfolio? And the third element I really wanted to sort of have here is effectively this incentive package. What is there in the industry at the moment that can help those guys or new guys to come into the market and actually build this stock and have it as a going concern? And without sort of wanting to talk on too much, of the three sort of ways forward, and some of these are picked up in the Montague report, which I'll second what Nick said. It's actually an easy read. It's very, very clear. It's an understandable. It's quite a logical report, actually. And what it talks about there is sort of planning incentives. How do you actually have a stick and a carrot? How do you force, in some respects, organisations to have to consider the choice of doing private rented rather than only housing for sale? How do you create stock? How do you incentivize? How do the public agencies actually get involved to use their assets to create this stock in the first place, that we have something we can compare against? And then I'll leave it on the student accommodation model, because the first scheme I looked at for student accommodation I think was something like 1999, and there were probably 2 or 3 major players in the market at that point. You look at the class now, recognised asset class, probably 10 or 15 major suppliers, organisations like Unite, 40,000 units. That's only 10 years ago. And we've been talking currently in the market about how the private rented sector hasn't kicked off yet. But where will we be in 10 years' time? I genuinely see this market as something that is an inevitability. We've got too much housing shortage. Rents and mortgages are difficult for the average person, from an affordability point of view, equate. And the only way you'll get forward is to have another option. But at the moment, we're in a dilemma of incentivising people to do it.
Okay. Chris, that's great. Thank you very much. Moving swiftly on, Richard Parker from PwC.
And I promise to keep to 5 minutes. 3 numbers actually form the basis of my 5 minutes: 16, 54, and 10. And I think within that lies, I think, the opportunity to increase housing supply without us doing anything fantastically differently. Although I think it does require some work from government, both centrally and locally. I worked on the housing revenue account under the previous government, and I'm very pleased it was an approach that was integrated into the localism bill, and now it's been the freedoms that local authorities have had now in place since April, that needs to be followed through. The 16 comes actually from the fact that the average level of debt held by local authorities nationally within their HRAs is only £16,000 a unit. The business plans of local authorities over 30 years, which is the business planning horizon local authorities prepare, would, if local authorities manage their asset base as efficient, as effectively as the average housing association, would over 30 years generate net revenue or net rental surpluses of over £54 billion. That's where the 54 comes in. And that's because the model that was put in place to ensure the Treasury at no point in the future would have to intervene in a local authority housing affairs to remedy any fault lines in the way that the business planning or business processes worked. What we have then is enormous potential in local authorities for them to secure additional borrowing against an asset base that is valued in only £16,000 per unit. And I said, if there are housing associations, they could probably go out and borrow twice the value. That, in today's terms, is equivalent to about £25 billion worth of under-leveraged assets. Now, there's a very good reason why local authorities can't go out and borrow against that asset base currently, and that's because of the Chancellor's deficit reduction plan. So he's concerned about the impact that additional borrowing would have. But I think it's very, very interesting. I know Richard Reeves was advised to Nick Clegg on Radio 4, I think last week. He commented on the fact that, given the challenges we've got, shouldn't a future Chancellor Exchequer or even a current one just consider the ways in which a narrative could be developed to ensure that some of this borrowing to support housing growth wouldn't necessarily count as additional public sector debt. Well, that might be a problem for the Treasury and ONS, but the reality is housing is different than other infrastructure. It does generate a rental stream and it has a tradable value in itself. So the two figures there, the 16,000 is an average debt per local authority unit, and the 54 is what we computed in a report we published last year of the potential net rental surpluses that could be generated. Interestingly, this city we're in now, its housing business plan has a surplus of £2.5 billion at the end of a 30-year planning horizon, and during that period it's projected to pay off £600 million worth of debt as well. But the council can't access that funding currently because it's unable to borrow against that asset base. The 10 I referred to is simply the figure that was announced recently in terms of the government guarantee that could be available to support housing investment, and I worked with the team in PwC, with the Treasury and the CLG on the details around that announcement, and there were many, many more details than those that were in the public domain following the announcement itself, and I'll be speaking to the Treasury and the CLG again later this week around that. But I think it's a very, very creative approach. Actually, I'm not sure, Nick might come back to this, whether it is contrary to what was referred to in the Montague report when you sort of indicated a preference not to proceed with guarantees. But in essence, the government have committed to putting a £10 billion housing guarantee in place to support new build housing and to attract the institutional investment that has been referred to already. A lot of work to be done to work out how that guarantee would work and the way it would support projects, and actually ultimately the risk that government is prepared to take on specific projects. But I think it could, if it is fully developed and worked through, act as a catalyst to address some of the concerns that institutional investors have, and potentially provide the kickstart to the construction of market rented or private rented housing that we referred to already.
Okay, Richard, thank you very much for that. Nick Ebbs.
Well, numbers seem to be a bit of theme here, and 3 is one of them, so I'm going to go with 3 points. So I'm going to talk briefly about the housing crisis, I'm going to talk about supply and sustainability, and I'm going to talk about PRS. So the crisis. The housing market is in meltdown. Last night we heard from Birmingham colleagues that we reckon we need something like 9,000 homes in this city. Last year we completed 1,500. Across the big divide, which is the M1 in the markets I regularly work in, which is in the East Midlands, in Nottingham, the estimate was 1,000 homes needed. Last year, 100 were built. I mean, I've rounded the figures, but this is the size of the crisis. It's like, come on, somebody needs to wake up. This is really serious. There is another major problem, and that is there's a whole generation of people who are not getting decent homes within their means, and they incidentally include my kids. Now, my kids are very privileged. They can come home to ask from the bank of mum and dad to help them with a deposit. So far I've said no, but I think I'm going to have to concede. But God, how about all those other kids that can't go to the bank of mum and dad and get themselves a deposit to get on the housing ladder? And there's a vast number. There are thousands and tens of thousands of these youngsters. It's not just youngsters, but there is a whole cohort of the young generation who are not being able to get a home. Now, they are living somewhere, clearly. They're not all on the street, but many of them are in substandard rental accommodation. 90% of the rental market, Nick, you may be able to correct me on this, is provided by private landlords. There are some very good, there's some very average, and some very poor. We need an institutional market. So, my second point is, what are the solutions to this crisis? Well, one, I think, has to be around supply. Kate Barker, remember Kate Barker? Did the report some years ago. I mean, and much of her theme was about we need to increase the supply. Part of that is about increasing the supply of land. Just before I go there, though, just a reflection, and that is, should we not also be putting a lot of effort into using or better using our existing stock? So there's lots of kids in this city who are students at all the great universities in this city living in family housing, in big family housing, 4 and 5 bedroom family houses, which there's a desperate shortage of all being carved up for students. Is that not daft? I mean, it really is. Let's get some more student housing accommodation. Let's get that those big family houses back to provide the needs for 4, 5 and 6 bedroom housing for which there is a crisis. It's not that difficult. It's easy to come up and say this is what we need to actually. I know there's a lot more. There's a lot more. So I retract that point. But the point about that surely makes a lot of sense. Similarly, lots of people, single, people living in homes, in nice homes, in Edgbaston and whatever, which have got 2, 3, 4 and 5 bedrooms. There is something has got to sort of fix here. Part of the fix is also about land supply, but I just want to put a word of caution here. It came out in a debate we were having last night about we need to be more relaxed about Greenbelt, we need to open up all this land. And we were in Marco Pierre White restaurant last night. It was very, very nice, and I was looking out of the window, and God, all around, you look out of that restaurant, there are empty brownfield sites all the way around that restaurant. I was thinking I could do 200 there, I could do 500 there, I could do 1,000. Let me at it, I'm a developer, by the way, but I mean, literally, you're looking out there and you think, God, there is so much capacity brownfield, and it's the infill sites. Now we need smarter developer models. I think Wilmot Dixon may have some solutions here. It is. Thanks, John. That's a hint. So when I come, you say anyway. But it is about smarter development. It's about more creative ways of delivering this brownfield. And then finally, PRS. And I'm conscious my 5 minutes not far off. So I work for a fund. I work for Aviva Igloo. It's an ethical fund. Aviva have put a lot of effort into looking at how to structure a residential investment fund. You know what? It doesn't work. Resi is not attractive as an asset class. I mean, think about it. You've got tons and tons of tenants. Lots of them will do a runner. Lots of voids. You've got to replace the kitchen probably every 5 years. Depreciation is a nightmare. Chris made the point. Compared to commercial asset classes, it's a nightmare. For those who are trained as surveyors, I remember residential investment was always regarded as the worst of all investments. So it's not attractive as an asset class. Don't keep beating up the institutions saying you need to invest more in this class of property. What you need to do is understand what the institutions want and then find a structure that makes it work for them. What the institutions want, and I work for one, is long-term, low-risk returns. So they want 50-year commitments, they want guaranteed returns, inflation-proofed, and in return, they'll make money available at 4 or 5%. I mean, that is very, very cheap money, but they need that sort of structure. That is a million miles away from how the residential investment market tends to work. So what do? You do 2 things. You create an intermediary, an organisation that acts as a buffer between the institution and the tenant. So that's with lease guarantees, rents, those sorts of structures. Local authorities, RSLs can provide that sort of intermediary type role. You incentivise the market by making available sub-market land. So you make available public sector land at less than market value in order to... And there are other ways of doing it. Again, it is possible. It just needs a little bit more effort. And then on my final point, who should be delivering all this stuff? Again, it's very interesting in the debate we were having last night. I think local authorities have an absolutely pivotal role here, and not just because they are the planning authority or they have an housing strategy responsibility, because they have lots of land, because they control the planning, because, and everything my colleague on the right was just saying, they have potentially, if we can find ways of easing it up, an awful lot of money. Wouldn't it be smart, and maybe I would say this because I run a public-private partnership, wouldn't it be smart to bring together the likes of private investors and developers who understand about delivery of housing alongside local authorities with land and some of their revenue account? I think together we could crack this problem. And you know what? In the 1960s, when we had a housing crisis, where did the government, the Tory government, look to produce lots of housing? It was actually the public sector. I think the public sector are absolutely central to this solution, and it ain't the volume house builders.
Okay, Nick, thank you very much for that. Okay, last but by no means least, John, and obviously you've got the answers as well, which we're looking forward to.
So I'm probably going to touch on a little bit about us, because I think we're in a slightly different position than most people are here, because we're not only a developer, we're also on the sharp end on the delivery end, and we're also looking after probably about most of the existing council stock in Birmingham. So we see it from a number of different sort of perspectives. Being sort of the second largest contractor in the UK, volume-wise, we tend to build around about 1,300 units to 1,500 units a year. Not all our own, a lot with RPs. The housing market for us is definitely, there is a sort of north-south divide. I think that the London housing market is completely different to the ones we see in the Midlands and the north. So I don't think one size fits all. Like Nick was saying, I think local authorities are fundamental to some of the areas that they'll be touching on. But I think for a contractor, a developer, we develop our own products. The private rented fund is probably an area that we're focused on. Those being in the age group between 25 and 35 is where we're focused. And we've got a programme of works ahead of us. We hope to get our first private rented fund scheme off the ground next year. Our own design, our own product. So for a contractor to actually develop their own product is quite different, particularly in this area. In terms of some of the issues that we see, I think Nick mentioned the cost of land is obviously an issue. Delivery from a contractor is also a key component. We're sitting at the moment with building costs at their lowest level for many years, 20% lower than probably 2 or 3 years ago. So I think we're in this space, particularly the market rental fund, where we're at a real key point where the numbers are just about working out right, as long as we get the land price right, the delivery price is right. Margins are very marginal in this market. So I think my sort of recommendations would be to move fast in this area, because there is a moment of time to grab. I think, as Nick says, local authorities are very key in this whole process. To have a local and private partnerships is key for us. The problems we find at the moment is local authorities understanding all this stuff that's pouring down on the HRA reforms and all this other stuff that's sort of falling around them, and try to consume all that and actually produce products and procure things in a very speedy way. I think they've got some issues. But there are good examples, some real good examples of some real good work that's going out there. In fact, at Westminster, we're actually taking two leisure sites, and closing those 2 leisure sites down, taking it and building a residential premises on one, some for private self, some for obviously for social housing, and actually providing a new sort of leisure facilities. So I think on the sort of lines Nick's talking, there's a need for wider thinking, better cooperation between local authorities and private sector. I think speed would be my worry, Stuart, at all, is actually can things go quicker?
Okay, all right. Thank you all very much. Okay, we've got probably about 10 minutes or so for questions and answers. If anyone's got any questions in the audience for the panel, put your hands up. We'll take a couple at a time if we can. Okay, gentlemen, if you can say your name and where you're from. We've got a microphone going around. So.
I'm Paul Dale from RJF Public Affairs and political correspondent for the Chamberlain Files, a blog site in Birmingham. I'd be interested in the panel's views on the housing target for new houses in Birmingham. In May, when the council changed control politically to Labour, one of the first announcements from the new regime was that the target for new housing by 2026 would be raised from about 50,000 to 70,000. But that announcement was accompanied by a statement that, of course, we can't possibly find enough space in Birmingham for 70,000 new houses. Therefore, probably about 15,000 of them at least would have to be built outside of the city, which would involve negotiating with surrounding local authorities. I was interested in Nick's point about all the brownfield sites in Birmingham, which really raises the question, 70,000 new houses by 2026, is it possible?
Okay, thank you for that, Paul. Should we take a couple more and then we'll go to the panel? There's a gentleman in front of you, actually, Paul, and then to your left as well.
Good morning. My name's John Akers. I'm from Turley Associates. I saw Sir John Banham speak at the HBF conference last week. He's been chairing the Future Homes Commission, and he was making the point that, and I can't remember the figure, but it was something like 6 billion, I think, amount of funds are available for investing in the private rented sector from local authority pension funds. And I just wondered what your thoughts were on that. And just as a follow-up, it seems to me that whilst there's nil inflation in the private market, private housing market, private rented sector is obviously going to be attractive to home occupiers. But as soon as we get inflation back into the private market, it seems to me that they're going to lose interest in renting property and want to go back to investing in their own homes again, as we've always done in the past. So it seems to me that the opportunities in the private rented sector may, in fact, be limited over the longer term. I'm just interested in your thoughts on that one.
Okay, John, thank you for that. One other question before we go to the panel. There's a gentleman to your left.
Thank you. Bob Ghosh from K4 Architects in Birmingham. Just a very simple one. What lessons can be learnt from mainland Europe, where PRS seems to be the norm?
Okay, thank you for that. Okay, lots of PRS questions. I don't know, maybe Nick, do you want to come back on your point about the fact that there's loads of sites in Birmingham? We can build lots of homes here. We don't need to go outside and take over other parts around Birmingham. There's loads of things we can do here.
Yeah, 70,000 homes is an awful lot of homes, and might require a lot of land. But we need to learn to build effectively at higher density. They do that very well in Northern Europe. You go to, I've just been to Amsterdam and looked at Almere in various places, Rotterdam, Malmo, very, very high quality new neighbourhoods that are built to densities that we don't even get close to. And they work. So it is possible to build high density housing without having to build huge tower blocks. I mean, this weekend I'm going to Bath. I love Bath. Look at the Georgian terraces. Look at the density that our forebears managed to achieve in Georgian times. The other point is, and something I find slightly depressing with the kind of narrative that's emerging around housing at the moment, is have we forgotten about sustainability? What about the whole sustainability gig? What about Lord Rogers' report, which I thought was a highly commendable report? The downsides of building on greenfield is you get sprawl, you hollow out the city centre, you lose precious greenfield sites. Let's try harder, is my point. The easy solution, and the one that and I'm sorry to keep beating up on the volume house builders, but maybe it's deserved. Or maybe it's just their business model. It makes sense from a business model to build on a nice, simple greenfield site. There is going to be a lot of people clamouring to build on greenfield. Resist it. Let's think smarter. Let's think and look at new designs. Let's work much harder to bring forward the brownfield first, and only when you've done that do we start looking at the necessity of greenfield. Okay, thanks for that.
Richard, do you want to come in on the point about potential for local authority pension funds?
Yeah, just a short point on that. I would say, ultimately, those organisations are accountable to the trustees and their members and subscribers, and they have to approach this with the same discipline as any other institutional investor. So there is, ultimately they face the same challenge, and they have to allocate their funds in a way that they feel most appropriate. So I don't think it's I think I applaud the appetite for those, the chairs and chief execs of those funds looking for ways to invest in local infrastructure to support housing growth, jobs, and everything else. But there remains a substantial challenge: is that they face the same hurdles around returns as any other third-party institutional funder.
Yeah, Chris, I want to come to you. Do you see, this issue about momentum for the private rented sector in terms of, and maybe you're picking up a number of points there about how we could actually build some more momentum into that through a creation of an asset class that would be attracting in investors. Do you recognise the point that's being made by John there, that actually we may kind of, when we're building that, we might lose out in the sort of in the smaller, more local scale of private rented sector provision?
Yeah, there's. I'll come up on John's point actually on the 6 billion first of all. Because I find that's very. It's exactly the same as being told daily that there's commercial loan facilities available for small businesses. It's the same as the building society is prepared to lend us all mortgages. The money's there, but when it comes to signing on the dotted line, there's a risk profile which they're not prepared to sort of step beyond. And whilst the money is theoretically there, we have to make it a lot easier for the industry to make that decision to commit to spending and loaning the money. And come back onto your pipeline question, and a lot of this is about creating some certainty in the market. As Nick said about the investors like, I think you said as well, about the sort of length of terms. We don't have at the moment a private rented sector which actually has an incentive for long-term buy-in. They're all short-term rents. There's no 10, 15-year covenants on sale of these units or restrictions of sales. So instead you start having those kind of, should we say, covenants put into blocks of rented apartments. The investors are always going to consider it as a higher risk venture, because ultimately it comes down to the strength of the management. And if you've got, there's two models really. You could have a single block of say 150, 200 units. It's easy to see that it's brick. It's got a management company. It's quality public realm, and you can see where your tenants are coming and going from. What we probably end up needing to be in is a model where we've got that and another tier where you've got lots of individual properties across multiple sites, but they have the same rental profile and they have the same management company across multiple sites. But that's a leap of faith for the investors because they don't understand it, and they will not put that 6 billion into it until they see somebody else do it and it works. And this is where the public sector actually do have a major role, because they can help to create those first supplies.
Okay, all right. John, do you want to come in on any of those points?
It's just on the sustainable one, because
Yeah.
our whole debate has missed out the sustainable agenda, and it's quite fascinating. I mean, and I suppose because we're talking about the growth of housing as opposed to the refurbishment of housing, yet if we to meet our carbon reduction commitment, we've got 26 million homes out there that either need upgrading or replacing. And it's something that constantly I hear these debates miss that kind of topic. And it's a real question that I throw out to people: why is that topic so low down on people's agenda? It's one of the 4 points we mentioned it, but as we said earlier, Stuart, we do just tend to gloss over the sustainable agenda.
We can pick up on that in terms of the quality of what's built. We talked about at dinner last night, so a number of us mentioned it around the table. But I mean, I don't know, Nick, do you want to come in on that? Because obviously, large landlord already, but obviously you're building a lot of new schemes. I mean, from your point of view, the sustainability, the quality agenda, to what extent does that help you to attract investment into funding the schemes you're doing?
Let me try and answer a number of the points and include that, because I think John's point is a very valid point about house price inflation and what will that do for PRS. That's a question we have to absolutely answer head on. Where is the house price inflation in the UK? Where is the house price? Where is the house price inflation in the UK today? London, absolutely. So what is the PR level of private rent sector in London? Does anyone know the answer? 25%, spot on. 800,000 homes, 250,000 landlords. In the average UK, it's 16.5%. There's 23% social housing in London also. Owner-occupiers down to 52% in London, be below 50% within 5 years. And interestingly, we talked about Europe. Bob asked about Europe. We have 7,000 properties in Germany that we manage, and so we give some hands-on experience about understanding probably the largest Northern European rental market. What are the two economic drivers of Europe? If you had to pick two economic drivers of Europe, they would be London, and they'd be Germany. Yeah, I mean, we can maybe debate that, but I think both have home ownership down at about 50%. Germany a little under. As I said, London will move that way. So I think the future of the PRS is in some kind of formulated and quality basis, and the points that others have made about delivering a product that people want to live in because it becomes a choice factor. 4 million households now. 1.1 million of those households are families. They're not all these 25 to 35-year-olds yuppies who are moving around in both relationships and friends and jobs. It is a lot of family people having to deal with that as well. And I don't think it's Europe we want to look at. I think it's Northeast America. You can look at anywhere in North America, but particularly look at Northeast America. Boston, go as far as Philadelphia, go up as far as Boston. It's not a long way to go. Go and look at how you can stand in the middle of Boston, a city with 600,000 people, a greater conurbation of 3.5 million. So it's not uncomparable to Birmingham, quite frankly. You can stand in a building on the edge of Boston Common that has 485 units, run by Archstone, 485 units built for rent, right on the edge of the theatre district overlooking the square. If you went to the top of that building, you could look across to the Back Bay, a 5-7-minute walk, 800 units owned by Avalon Bay. You could look across the Charles River, another 10 minutes. I'm looking at Jason, who's the American in the room. He'll tell me whether I'm getting my timings wrong. And you've got 635 units, another Archstone building, another warehouse conversion of 235 units. I've walked around these buildings and gone and had a look at them. There is that, and that's just two brand names in just picking 4 buildings within a 15-minute walk of each other in a comparable sized city with a climate the same as similar to what we have, actually not probably more extreme in that it gets colder and it probably gets warmer. And so that is a comparable to go and look at and say, and there they offer, and this deals with some of the other questions about the family homes piece that Nick was talking about. I believe, and this is slightly moving out of non-substantiated vision, but if you provide a quality product for people, they will move into it if it's priced right in the market. And pricing right in the market, when you go and look in America normally on the suburbs and away from some of the shinier buildings in the centre of town, you come out of one block and on the other side of the road is a thing hanging on the balcony that says move in for $99. Which means if you're not good, if you don't know your tenant's name, if you don't greet them in the morning, if you don't make the place that they're living in a decent environment, they'll quit, they'll move next door. And so those kind of standards need to be introduced into the UK where tenants will have a choice because they are mobile and they're able to give notice. And what will that do? You won't rent a crappy 2-bed, converted Victorian house or 3 or 4 bed. Those will return. Any of you who know Clapham, look what happens to Clapham over the last 20 years. When I was a sort of student and moved to London for the first time, Clapham was a bedsit town. I mean, it was places just the houses were all converted, people sharing. Now Clapham has been it's family homes because people moved out of living in those sort of standards, moved into the new blocks that were being built, and those houses reverted. Now that is, I admit, a vision, but it does go some way to Nick's point about providing larger accommodation for families so that they can live in stock that was built housing and recycling housing. So I think all of this, it's a matter of getting that vision, understanding that the examples aren't very far away for us to learn from. And I'm afraid, we like it or not, the PRS is here, is here for real. And it'll be up to someone talked about bad landlords. It'll be up to the good landlords will provide something into that market, the type of quality product that John is talking about. That will be where tenants will move to, and the poor landlords, and some of them are not poor, they're criminals. Let's be blunt about that. People putting people into walk-in freezers and containers with bunk beds where they take it in turns by shift to go to live in there. Then actually that's a whole quality issue. I'm not going to go down the quality debate. We can have an hour's debate about that.
Nick, thank you for that. I'm just conscious of time. I suspect we probably need to be thinking about drawing this to a close. I'm sorry, time has flown by. We could carry on for a lot longer, I'm sure. But I think, certainly from my point of view, take from that there is definite, reasons to be cheerful, I think is fair to say, in terms of private rented and in terms of what local authorities could be doing. From the volume house builders' point of view, maybe, that's still an important part of the market. market, but it is pretty much what it is. And I think from a housing association point of view, again, lots of skills there, lots of work that can be done. But I think it's fairly clear where the panel anyway sees some of our growth in homes coming from. But they do see it as well, which I think is a good thing, good note to end on. But if we could thank our panel in the usual way. Thank you.
No. Yeah, definitely. Go to Boston and see what it is.